Several stock market cycles are flashing a warning. We're going to explore these various cycles to see what this stock market cautionary update is telling us. Thank you for watching. This is Richard with Wisdom Investor. The stock market works in cycles much like everything else out in nature. We have the sun rising in the morning and setting in the evening, and then we have our seasonal changes. We have winter, spring, summer, and fall. So the stock market works just like the seasonal changes we experience. We're looking at an 86-year seasonal cycle for the Dow Jones Industrials. So typically we get into the summer months. We have August right here, and then September and October. Typically we get into the August, September, October. The seasonal cycle is to the downside. Doesn't mean it does that every year, but over an accumulation of years, of 86 years, this is what the Dow Jones Industrials does. This is a chart of the S&P 500. It's based on the number of trading days. This was built by Stan Harley. Typically, about every 40 days, there's a low in the S&P 500. Doesn't necessarily mean a crash, but we hit some type of a low. Right now, the way it looks, as we see the S&P 500 rebounding, we're looking at a high in the S&P 500 based on this chart and these cycles here around August 13th. And then a low would be around August 30th. The S&P 500 stops right here because this was looking into the future. Here's a chart on the S&P 500 that's current, and you can see that we're approaching the highs here right now. Here's August 13th right here, bumping into the highs as of right now. So what this chart from Stan Hurley says, we're going to hit the highs around the 13th or so, and then around the 30th would be another low. Here's a chart by Larry Williams, master trader over the years. This is a chart based on time, so the cycle is on the red line here. He was projecting a high around July 27th. We had a little bit of a dip and then we came back up. So this is really closer to where we're at right now, around August 17th. And he's projecting a low around August 26th. So we don't know the rest of this, if the market should bounce and then go lower. But you can see back in March when this S&P 500 was moving down, the S&P 500 is in the black lines. It hit the lows just like this cycle did here also. Now this cycle here is based on time, not necessarily price. You can see we hit a low right here in this cycle. Price did come down, but it wasn't anything like it was in March. So this low here could be a minor low. Doesn't necessarily mean it's going to be a crash. Here's the Dow Jones Index 4-year election cycle. This is from 1897 to 2011. August, September area, we start to dip down in most years in the last quarter of the election year. There's always a possibility the market could move down due to the election. Here's the Dow Jones election year, seasonal, 1900-2008. So this is the final year of a president in the election year. Here's August. Market typically moves up and then sometime in September moves down as we get into October. This is the Donald Bradley Planetary Index cycle. This shows a high moving up into August 19th, which is this week, and then moving down into December. We've been looking at several cycles here showing warning signs that the market may move down. Let's take a look at what happened in November of 1929. We had a market crash. After the market crashed in November of 1929, the market started to move higher. Now this went on all the way into March of 1930. So very much like March of this year when the market crashed, it started to move up. So it moved up 5 or 6 months like it's doing now, and then the market proceeded to drop lower. Now we don't know if it's going to do that. If the Fed does everything they possibly can, they're going to try to hold this thing up. But this is what happened back in 1930. The market crashed about 5 or 6 months after the November of 1929 crash. So what could stop a market crash? Now, if we get a lot of news out there about a possible crash, I would say there's probably a very small chance that we'll get a crash. Typically, when the market tries to sell off, it's a surprise. This is the Dow Jones seasonal cycle. So August, September, October is typically the weakest part of the year for the markets. So this would be the time that we would see some type of a low in the market if it's going to happen. I want to thank you for watching.